Good, wonderful evening, beloved student. As you know, my name is Mr. Harmony, the accounting shining star. Let us welcome Buso. We are still proceeding with our journal together with the general ledger accounts that need to be debited and the other account need to be credited. Now, when we debit and credit, we are actually applying what, student? We are applying the rule of double entry principle or double entry system. So, as I usually say, we're gonna be using three accounts. You know that asset, what makes asset? Let me just write here. This is the equation that we're gonna use. What makes our asset in our business? Asset, it is being made, you're welcome, by equity. Asset is equal to equity plus liability. You're welcome, plus liability. Asset is equals to equity plus liability. Now, when I say asset is equal to equity plus liability, it's like asset. What is an asset? Everything that your business owns, everything that belongs to your business. For example, asset is everything that belongs to your business, like the building, the land, the vehicles, or any mode of transport that you bought for the purpose of to be used within the business, and the furniture, the equipment of the business falls under asset. Everything that belongs to the business, to the name of the business. Now, what is an equity? Equity, it is the money that you as the owner of the business, the money that you can claim after what? After paying your expenses. Remember, expenses reduces the business bank account. Now, after paying all the expenses together with the liability, the remaining money, it is the money that you can claim, that you can go and spend it together with your family. Now, the remaining is the profit of the business. It is been obtained or attained from the equity account. Right, now, plus liability. What is a liability, student? Liability, it is the money that you, as the owner of the business, the money that you owe to other businesses, debts of your own business. So the money that you owe to other businesses, for instance, if you have borrowed money from the loan check, if you have borrowed money from Ashonisa, if you have borrowed money from the unscriptural lenders, those are the Mashonisas, the loan check. So if you have borrowed money from the bank, Capitec, ABSA, anywhere, even from your friend. Now, when you have borrowed money from your friend, it means that you have incurred a liability. Any money that you owe from the third party, the external party, the other businesses that are actually outside from your business, we call that a liability. I think I've overemphasized the liability. Any money that you owe to someone else, it's a liability, right? Asset, asset is everything that your business own that belongs to your business. The car, the machines, tables, chairs, equipment of the business. Asset is everything that belongs to the business. Equity, it is the money that you can claim after paying expenses, and liability, the remaining money will be called the profit of the business, which is been known as the money that you can take to your household. Liability, any money that you owe to someone. It can be a bank, it can be a person, it can be another business outside. Any money that you owe to other businesses or to anyone, we call that a liability in your business. Thank you very much. This is what we call power. Right, we're gonna be using three accounts. The asset account, in order for us to get the correct answer from this transaction, from all this question, what is it that will help us to get correct answer? The asset account, sorry, the asset account, the equity account, and the liability account. Those are the three accounts that will help us to get the correct answer when we read each and every question here. Can you see? I don't just start with the questions. I start by building the moral, the high moral of the subject into your psychological mind before I start. Can you see now? So we have to know your accounts before you can attempt the questions here, right? Or the transaction. So we're gonna be using the asset. Can you see? A, asset. This is a general ledger of the asset account, the general ledger of the equity account, and the general ledger of a liability account. That's why we said what makes an asset. What makes an asset? It is equity plus liability makes the asset. Everything that belongs, what makes everything that belongs to the business is the equity account together with the liability account makes help us to calculate everything that belongs to the business. Powerful. Right. Let us read the first transaction so that we can go and do the question number 8 or transaction number 8. Complete the following table by indicating the correct journal for each entry and the 2 general ledger accounts involved. The first transaction has been completed as an example, right? They were actually talking about this one. Remember, we have actually dealt with it last night, right? So for those who did manage to attend last night, let us just move to question number 8 or transaction number 8. Now, transaction number 8 stands as follow. Purchased a vehicle and paid for it. Student, please help me. I just want to see what I'm teaching to you. Do you grab and grasp the information? The first step that we need to do, you are welcome. The first step that we need to do, can any one of you, Steenkamp, you are welcome. Can anyone of you just tell me which 2 important keywords do we need to go and highlight from this question, question number 8? Only 2 keywords that will help us to get the correct answer. Which 2 words do we need to highlight here? You can open up your mic and then blow our minds. I thank you.
Purchased and paid.
All right. Thank you very much. Who are you?
Kekeleto.
Thank you very much, Ms. Kekeleto. The word vehicle will be the word that we're going to highlight, and also highlight the word paid. You know, some of us, we are actually joining from rural areas and some semi-rural urban areas and whatsoever. So when you are trying to say something, the line is breaking. Can you please say, repeat your statement? Someone was actually talking to us. Can you kindly repeat that? The line was breaking. Okay, now let me proceed. Can you see we have highlighted the word vehicle, and also we're gonna go and highlight another important 2, the second keyword. We are applying the double entry. The second keywords that we need to go and highlight is the word paid. Can you see? Right, student. For each and every, you are welcome. For each and every transaction or each and every question, in order for you to get the correct answer, student, you have to go and highlight. You go and highlight what? 2 important keywords. Now, if you can tell me here, the word paid will create which account?
Bank.
Right, the word paid will help us to know that the bank account will be affected. Right, the bank account will be affected. We have identified our first account. The word paid create the bank account of your business. And then the second word, vehicle. And then what type of account is bank? Bank falls under? We want to know. Yes,
Asset.
powerful. We want to know that bank falls under asset or from equity or from liability. Focus, student. You have to know your accounts. Now, bank falls under the first one, the asset. Can you see? You identified your account. Now, when you are able to identify your accounts, everything is gonna be easy. Can you see? Bank falls under the top one, asset. You are done by identifying the first account. Now let us go and also identify the second account. Now we have our second account, vehicle. You just go and write it down, vehicle. And then you are done because you have identified your 2 accounts. We are applying what? Double. Double means 2. Double entry principle. All right. So vehicle, what type of an account? We have an account called vehicle. It's an account by itself. It's an account by itself, vehicle account. Right. Vehicle falls under asset, equity, or liability.
Under asset.
Powerful. Right. Vehicle falls under asset. Why asset? Because remember, vehicle it's a mode of transport, a mode of transport, and then vehicle according to the subcategory of this account. Remember, go and watch the videos that I've actually sent it to my online class group. I've actually explained everything. I think you do remember. Vehicle is one of the what? Vehicle, sorry, let me just write the account very well. Vehicle is one of the asset account. Now, what type of an account is vehicle? Is it a current asset or non-current asset?
Non-current.
Non-current asset.
Okay, if I may ask, why are we classifying vehicle as a non-current asset instead of saying vehicle is a current asset? Why are we classifying vehicle as a non-current asset?
Because it stays reporting period.
Because of what?
It's on the reporting period.
Uh,
More than 12 months.
Okay. Yeah, but your line is breaking. I cannot hear you clear. Can you just kindly maybe project your voice, speak a little bit louder so that I can hear you very well?
The reason why we are saying it's a non-current, it's something that will stay to the business more
Powerful.
than
Powerful. Thank you very much, sir. It falls under non-current asset because remember, a car, a motorcycle, van, or whatsoever, any car that you've bought in your business, it's something. Why are we saying a vehicle or a car? It's something that will be falling under non-current assets because the definition of a non-current asset says that non-current assets are assets that you're gonna be used in your business building for a long period of time, starting from full 12 months upwards, full 1 year, 2 years, 3 years. You can use the car vehicle. In accounting, the language of the module, when we talk about vehicle, we're specifically talking about any mode of transport. It can be a car, like a van, lorry, you know, any mode of transport. We are talking about vehicle. So you can use a vehicle for 5 years, 2 years, 3 years. You see, so it's something that you're gonna use for a long period of time. That's why we say a vehicle, it's a non-current asset. By definition, what is a non-current asset? Something that you're gonna use for a long period of time within your business. Powerful, right? Vehicle is a I don't have sufficient space. Vehicle is a non-current asset. Can you see? You have identified how many accounts you got. Your 2 accounts. Remember, the word paid affected your business bank account. Why, Mr. Hamun, are you saying the word paid will affect bank account? Can you see? Every time when I start student, I explain long. Now, when I'm going to do the second transaction, I won't explain long. I will just run with other transaction. So why are we saying the word paid will affect our bank account? Remember, student, every time when you pay for something, you have your business. Take this question as with a perspective of to say this is a question or transaction that belongs to your business. You are the owner of your own business. Now, one of these transactions occurred within your business, purchased a vehicle and paid for it. So it means that this transaction concerns you, the owner of your business. You are the owner of your business. Now, when the transaction says purchase the vehicle, synonym, let me use simple English. The transaction actually says bought, you buy. You bought a car and paid for it. Can you see? So you have to say every time when you buy something, where do you take the money? Obviously, the word paid create the bank account, because for you to pay for this car, you need to take the money from the bank account of your business. Powerful. Now, bank is an asset. Bank falls under here. Asset. And then we know that bank, what type of an asset? Bank is a current asset. The definition of a current asset says current assets are assets that can be converted into cash in a short period of time. Now, bank account is something that you can use for a short period of time. For instance, you put money in, you remove money. You put money in, you remove money. So the word current, it means that something that can happen now, within a year, within full 12 months, but before the year end, it keeps on occurring. It keeps on continuing happening. So that's why we classify bank as a current asset, because you remove money today, even tomorrow, and then you receive money from other people today, even like tomorrow. That's why we classify bank as a current asset. Powerful. Right. Now, can you see? I have overemphasized these two accounts. When we are going to be doing the rest of this account, I won't actually explain a lot, because the first one, I just want you to grab it so that we can run with what we call an accelerated speed, right? So let us go and open our bank account like the first one. Every time the word paid affected or created our bank account. Can you see? The word paid created the bank account. Bank falls under asset, but specifically bank is a current asset, right? Which other account do we need to open? We will have to go. Let me just do this. Let me just see. Okay, I will have to use this one. Let us welcome Kaugelo. I will have to remove this equity account and also put an asset, because only asset account is being affected. Can you see? Only asset account is being affected. I'm going to show you why am I saying only asset account has been affected. Now the sign will change because we are dealing with asset account. Can you see the plus on our left-hand side, minus on our, the plus on our left-hand side, minus on our right-hand side. And then even here, the sign will change, plus on our left-hand side. And then also here, minus on our right-hand side. Can you see this account, the question by itself, this one, only affected what? Our asset account. We have two asset accounts. The one for bank, and then the second one for what? For vehicle. It means that now, focus now, student. I'm coming to the crucial part, the most important part now, please. And then if you don't understand, ask me. Now we are coming to the important part of the sermon here, right? Can you see? We have an account called vehicle account, right? Focus now. Now, remember, when we buy an asset, a car or a van whatsoever, money must leave the bank account. Which side? On our credit side. Can you see? On the minus side. So after removing money from the bank account, the car has to come into our business building. Can you see? Whenever money leaves the business, it's a minus. When we receive the car, it's a plus. Can you see? It means that we are applying what? Double entry principle. The left hand, the right hand, we have lost the money in our right hand, and then in our left hand, we are coming with a car into our business building. Can you see, student? This is what we call double entry. We are applying the rules. Both equation are balancing, right? So let us go and reduce our bank account. Now, focus. Please, I plead you, if you do have a question now, you can ask. But please, for this now, for this part, please focus. I plead you, I beg you, Afrikaans, ex-mere killer, Zulu, I don't know, please for now focus, because this one, general ledger, will occur or appear in all of your assignment that you are about to write. So look here, we are saying you are using your business bank account details. You are telling us, why are you removing money from your bank account? Details, tell us. We cannot just remove money. Let us just say this car was how much? This car that you bought, actually, you have paid how much? For 45,000 rand. Can you see now? I don't know whether my mouse doesn't want to type. So the car was 57,000 rand. Right, let us welcome another student. Can you see now? Let us go and take the money. How much? 57,000 from the bank account. Can you see? The bank account, we are saying you are using your business bank account to pay for what? Details, tell us. What is it that you are buying? You are buying a car, a vehicle. Can you see?
A vehicle.
A vehicle.
Yes.
You are telling us, narration. You are using your business bank account. Details is like, tell us, why are you removing money? Because you are buying a vehicle, a car. Right. How much is the car? The car was 57,000. Right. You are done with your first account asset, which is the bank account. Can you see this one? We are now done with this one. Now we are left with the last one, the vehicle. Can you see what we actually said? You as the business owner, remember, see yourself as the owner of this question. See yourself as the owner of this transaction. You are saying you used your business bank account details. What is it that you bought? You are actually buying a car. And then how much was the car? The car was 57,000 rand. So every time when you buy something by using your business bank account, you need to record anything that whenever you buy something or money leaves your business bank account, you're going to record on your right-hand side. The language of the module, the right-hand side, it is being called the credit side. But if you are receiving money in your business bank account, we are now going to be recording on the plus sign. Can you see this side? Every time when you receive money in your business bank account, we record on your left-hand side, the debit side. Every time when you buy anything, when you buy something, as long as money leaves your business bank account, we're going to record this side. Powerful. Now let us go and deal with our vehicle account. Is an asset also. Right. Let us go and receive the asset in our business building. Right. Now tell us here, how did you buy this car? Where did you take the money? Can you see? We said in our business building, we have the car. Now, how did you buy the car? Under here, tell us like this one, details. You have a car in your business. Can you see one car is increasing on our left-hand side? How did you buy this car? Details, you are telling us the money was being taken from your business bank account. How much did this car actually cost you? The car that we have bought costed us 57,000 rand. Can you see? We have the car. Now, when we have the car, we are debiting it. How did we buy it? We took the money from this account, bank account. The money was being taken from the bank account. Narration, details. How much? Now you have the car in your business building that is worth how much? 75,000 rand. Now, when we as the auditors, when we come into your business building, we have to check the papers. Now, when we check the bank statement, or when you check the recording in your business books, now when I go outside and then check in your business yard, I have to also see this car, because now the recording says that the car now it is within the business building. Money is out from the bank account. The car is within the business building. Does everything make sense?
Yes, sir.
Powerful. Is there any question now?
No.
Right, let us go and proceed with the last important crucial part here. Can you see we are done with what? With the general ledgers. We are done with the general ledgers. Let us go and record in our accounting equation. Can you see, student, what happened to the bank account? The bank account, which side did we record on our bank account? We have recorded on our right-hand side. The right-hand side, it is been known as the credit side. Now it means that bank will be debited or credited. The bank account
Credited.
will be powerfully. Yes,
Credited.
right. Now, when we come here, focus. When we come to this account, can you see it says 2 accounts involved? Account to be debited, account to be credited. So what will happen to the bank account? The bank account will be credited. So we are coming to the credit side. Look here, account to be credited. We're going to write the account that we have credited by buying the vehicle. Bank account was the one that has been credited. CR with a minus. Money has flowed out from the business bank account. What type of an account is bank? Bank is an asset. A stands for asset. Right. So what type of an asset account is bank? Bank account is a current asset. CA stands for current asset. You are done. And then even here, the above one, right? Bank is an asset. Whenever we take money, you see it has actually punched. Bank is an asset. Now, what type of an asset? CA stands for current asset. Right. Now let us go and also debit the vehicle, the asset, the vehicle, the car that comes that we do now have in our business building. We have debited. Can you see? Money was out in our business bank account, but the car is in our business building. Right. Let us go and can you see? This one, it is been debited. Look here. The car is being debited. That's why account to be debited is a vehicle, the car that we have within our business building. Can you see now, student? Everything makes sense here. What type of an account is a vehicle or a car falls under asset? Specifically, it's a non-current asset, something that you're going to use for a long period of time within your business building. A car is a non-current asset. The definition of a non-current asset, it's something that you're going to use for more than a year. Many years, you're going to use this car for 5 years, 10 years, 6 years, you see, starting from full 12 months period upwards. Can you see the first account, which is bank? It's a minus on the bank account. It means that money is out. But now, can you see the second account is DR with a plus? CR with a minus, it means money went down in your business bank account. This one, vehicle, a car, you have the car now in your business building. It's a plus, DR. I think for only for this one, student, you have understood what we are actually dealing with. Now, let me run into other accounts with what we call an accelerated speed. Now, from this other account, I will have to run. So, is there anyone who can read the transaction for us while I'm still eradicating the information here? Because we're going to need this space to write for the second transaction. Anyone to volunteer? And then before you can read the question, every time when you buy something, journal, look here, a journal side, a journal is a book. Journal and book means the same thing, synonyms, right? So every time when you buy something by in your business, which book are you gonna use to buy the car? The money will go out from which book?
Cash payment journal.
Yes, because the word powerful, the word paid means that money is flowing out. So every time when you buy something, money will leave the CPJ. CPJ stands for cash payment journal. Paid, can you see the word payment goes hand in hand with the word paid? You paid. So which book are you recording money that you paid in the cash payment journal? Powerful. Can you kindly just read number 9?
Consumable goods purchased on credit.
Okay, okay. You can read, please. Thank you. Sorry.
Consumable goods purchased on credit.
Powerful. Consumable goods purchased on credit. Now, before I could actually explain what is happening here, which account is being affected? Let me just check from new and old student. Which account will be affected? Asset, equity, or liability?
Assets.
All right. And which other account?
Liability.
Liability. Thank you very much, student. Right, let me just give you answers here because now the first question we have actually explained a lot just to make sure that you grab this. So the account, every time consumable goods purchased on credit, it means that you are the owner of this business. This is your business. So consumable goods purchased on credit, it means that now it's an expense, right? So you bought expense on credit. On credit means that liability will be affected. So people whom your business, when you owe other businesses money, those business that you owe money, you call them creditors or suppliers. You see, now you are owing creditors. When we owe creditors, we need to credit our liability. So creditors falls under liability, right? Else then for liability. Creditors falls under liability, right? So will be, let us just say this one is a falls under liability, yes, but for buying the consumable goods, which is the expense, we're gonna also say it's a current liability. See, L stand for current liability. It means that you will pay for this consumable goods before year end. Maybe within 3 months, you have to make sure that you have settled the amount. You have paid the whole amount of money that you owe to other people that you bought the consumable goods from. So current liability says that you have to pay for those things before the year end. It can be 3 months. You have to make sure that you have settled the whole amount. It can be 4 months, 5 months, 6 months, 7, 8, 9, 10, up until 11. But when you are paying something for more than a year, like full 12 months, it's no longer current. Current, it has to be less than from 9 months downwards, not full 12 months, right? So can you see now our creditors who is being credited, we are owing them more, but let us receive what we have bought from them. So consumable goods, you can also write what you have received from them, which is consumable goods. But however, we know that consumable goods, it's an expense. Consumable goods is an expense. So expense need to be debited. So if I may ask, when expenses increases, what does expense do or does to the owner's equity? Every time when expense increases, they actually decrease the owner's equity. Remember, even last night, I have overemphasized this one. When the expense increases, owner's equity decreases. You can also go and check my YouTube channel and you will get some of this. And then as times goes on, we will be now doing the legitimate assignment of the module, the assignment that you will write very soon. We'll also be dealing with it. So every time, remember, when we buy something on credit, a stock, a car, whatsoever, when we buy something on credit, which journal or a book are we going to record something that we bought on credit? Yes.
Creditors journal.
Yes. It can be creditors journal, right? And or purchase journal. You see. So when we sell goods on credit, on which book are we going to record goods that we have sold on credit? In the debtors journal. So when we buy from the creditors, it can be creditors journal. CJ stands for creditors journal. Can you see? They actually work together, creditors journal, because the creditors account has actually happened in our business building, right? We are owing creditors, so every book that we buy something on credit, we're gonna record it on the creditors journal. You see, or you can also say PJ, which is purchase journal, right? So we are done with that one. I said now from the remaining, I will just move. Paid for stationery board. So stationery, what type of an account? Stationery is an expense. So we'll debit our stationery. Can you see? It actually punched the correct answer. Stationery is an expense, will be debited. When expense rises on the debit side, it makes equity account to decrease on the debit side. So the word paid, can you see? Now I don't highlight. Consumable goods has been debited. Purchased on credit, create our liability, which is the creditors. Now the word paid will affect what? Bank account. Can you see? Now I cannot write because you have to go and watch this video maybe 6 or 7, even 10 times before this information can dwell into your psychological mind. The word paid will affect what? Will create the bank account. So every time when we remove money in our bank account, the bank account needs to be credited with a CR credited. Can you see? We know that when we create bank account falls under asset. A stands for asset. What type of an asset? It's a current asset. You are done. Right. So every time when you buy something, which journal or a book do you record money that leaves your business bank account? In the CPJ. CPJ stands for cash payment journal. It's a book that you record money that leaves your business bank account. Right. Purchase goods and paid by check. Can you see? Every time when you see paid, you remember that bank account will be affected because money is leaving your bank account. Money is leaving your business bank account. Right, bank will be credited, and bank, we know that bank is an asset, specifically current asset. Right, what is it that you are paying for? You are goods, purchase goods and paid by check. You are purchasing what? Goods. Right, means that it's an trading stock. Trading stock. Or if you don't want to say trading stock, you can also say a merchandise. If you don't want to say merchandise, you can also say stock of your business. So when you buy stock, when stock comes inside of your business building, stock need to be debited. Plus, can you see? Money leaves the bank account with a minus on the credit side, but stock will be debited. It means that now you have the stock in your business shelf. When you debit the stock, it means that you do now have the stock in your business shelf. So you know that when you debit here, stock falls under what? Falls under asset. So specifically, stock will be classified as what? As a current asset, because the aim of the stock is to come in your business shelf and to go out. So why are we classifying stock as a current asset? By definition, current assets are assets that can be converted into cash in a short period of time. Can you see? You can convert the stock of your business into cash. You can convert your stock of your business into money. So when customer takes the stock, automatically you are converting the stock into becoming money. That's why the definition of a current asset says current assets are assets that can be converted. Convert means that you are changing the stock to become money. Right. Can you see? The stock of the business is not to be there for a long period of time within the business, but is to come into your business shelf and also leave the business. So that's why we classify the stock of the business as a current asset. So when you buy anything, money leaves the business bank account because the word paid. Right. Which journal are you going to record the money that leaves the business? CPJ. CPJ stands for cash payment journal. It shows that when you see the word paid, money has actually left the business bank account. Which side? On the credit side of the bank account. Can you see? Now the stock actually came inside. Can you see? Every time when we lose money, it's a minus. When the stock comes into our business, it's a plus. You have applied your 2 double entry. The right-hand side, you lost the money. The left-hand side, the stock is within your business building. You are the owner of your business. Right. 1 minute left, 7 seconds. Right. Purchased, let me just see the transaction. We have a lot of transactions. Someone is writing on my screen. Kindly don't write. Can you see, students?